Welcome, fellow traders. Thanks for joining me. It is time for another thrilling installment of Patreon member Q&A, where my Patreon members ask me questions and I, based upon my 29 years of trading experience, answer, or at least attempt to answer their questions. This is not investment advice. This is all just for educational purposes and entertainment purposes and just my opinion. And hey, if you want to ask me a question and you're not already a member of our Patreon community, there's a 7-day free trial. There's a link in the description of the video and in the comments section. I got some good questions submitted this time around, so let's jump right in. 1 second. Let's see. Hakan says, "Hey Joe, what do you call your trading style? Swing trading ? Since you're actively monitoring the market, I'm curious, why don't you day trade instead?" All right, so, wow, where do I even start? First thing is that, as I mentioned, I've been trading for almost 30 years, and my trading style has evolved over the years, decades, I guess, and continues to evolve. I could do a video just on this alone, but I really have pivoted from being a value-based, long-term position trader to a maybe 70% technical, 30% fundamental swing trader with the option of holding longer and letting some of those swings turn into positions where basically I have to earn the right for a swing trade to become a position trade. So my average hold time depends on a lot of things. One, the condition of the market. If it's an early stage bull market, I'm much more likely to hold for a month or two or even a few quarters. If it's a late stage bull market or a choppy market or a bear market, then odds are much more likely and my hold time is only going to be a few days to a few weeks. Another consideration is the type of stock. If it's some retail stock or something that I've identified, let's say a trend channel, then maybe my goal is just to capture a 10 or 15% swing and get in and get out unscathed, so to speak. Conversely, if I've come across a stock that seems to have real blockbuster potential, like in my opinion Rocket Lab does right now, then I'm going to try I'll swing trade a piece to de-risk the trade, and then I'll try to hold on to a trailer for as long as I can, which may be months, which may even be years. Right now, I don't have any long-term trades put on except for Tesla, which I opened in 2019, and the ETFs IGM, QQQ, and SPY. But prior to 2022, I had a handful of long-term positions that I've been enjoying for quite a while, and then I closed those out as the market rolled over. So, wow, long-winded answer. I'm a swing trader who occasionally lets those swing trades develop into position trades. Okay, why don't I day trade instead if I'm staring at the screens all day? So a few things. First of all, although I rarely plan on doing a day trade, buying at 9 a.m. and selling at 10 a.m., I do a lot of intraday adjustments. For example, GLD here, I just went long today. I should have gone long a few days ago, but I just went long today. If this had squatted and reversed, I would have sold most or all of the position the same day. I bought it this morning. I would have sold it in the afternoon. So I do a lot of adjustments like that, and I'll adjust in the other way too. I'll buy a breakout or a pullback bounce, and then if it's closing strongly, I'll add to it at the end of the day. And then I also sometimes, if it's a large position, I'll break it into 4 pieces. Buy half, see if it's behaving. A couple hours later, buy another quarter. End of the day, buy another quarter. Now I have the luxury of doing all those adjustments intraday because I'm staring at the screens the whole time. Then the other time I day trade is, if I just the blind squirrel finds a nut. Let's say I buy a stock and it ramps up intraday 17%. I'll sell the whole stock right then and there, or at least a big chunk of it. Why not day trade? It is the siren song. It's exciting. It seems like easy money, scalping things for a few percent here or there. And if you're an expert trader, you'd think you could do that pretty easily. First, anecdotally, I've been around a lot of traders for many years. I have never met a day trade. I've never met a millionaire who made their millions by day trading. I've heard countless people talk about day trading, most of them under the age of 30, but I have yet to meet one who's successful. I know they're out there, but I think it's much harder than it looks, and I think it's much harder than swing trading, position trading. There's just way more random noise, and as far as buying patterns and so forth, the shorter the duration of the pattern, the more apt it is to be a false signal. I have tried day trading many times over the years, and I don't think I've been profitable at it. I think I'm sitting at a net loss with my day trades. If you are going to day trade, you really are best off trading things that are really liquid, stocks that are very liquid, trading a bunch of shares, and or the ETFs. That will definitely help minimize the random noise. Okay, we better move on to the next question. Let's see. This is from Shane. Hi, Joe. Welcome back. I took kind of a semi-break this summer. It was nice. Hi, Joe. Welcome back. I'm still struggling with position sizing and wondered if you could provide a brief overview of how you would position size based on, say, $100,000 paper account for educational purposes only. Whilst my losses are small, so are my gains. Yeah, that's the thing, isn't it? If you're trading small, the losses are going to be small, but so are the gains. I think I'm just too scared to go full position. Also, what percentage of equity are you prepared to risk on a trade? I read that an acceptable amount is 1 to 2%. I would love to hear your thoughts on that. Okay, Shane, I'm going to give you a short answer and then a long answer. I think a good starting point would be a 10K position in a $100,000 account, a 10K position, which is a 10% position with a 5-ish% stop. Therefore, if you get stopped out there, you're going to lose about $500 or 0.5% of your equity. That's the short answer. But the long answer is this is very much an art, and trading is an art. One of the most artistic parts of it is position size, and it's progressive and it's ever changing. I know that you see on YouTube and in books and so forth all the time these famous traders or institutions saying, I only risk 1% per trade, or, every trade I make is 1% of my portfolio. But you have to keep in mind these guys have accounts, multi-million-dollar accounts, and so they can place a tiny percentage bet and make big money. And then secondly, they will never put on a big bet because they'll get fired if it goes wrong. We have the advantage that we can put on any size we want. So I learned a lot about progressive exposure from Mark Minervini. I've been meaning to do a new video on that and how we generally are progressive too slowly, if that makes any sense. Let me try to answer your question though. You want your position size to be based, 1, on your performance. If your last handful of trades have done or are doing great, then you trade larger, and vice versa. 2, based on market behavior. Is the market trending nicely? And most importantly, are we not seeing any volatile, unexpected pullbacks and gap downs that are like landmines that you might step on or pitfalls that you might fall into? So your performance, how is the market as a whole behaving? And then the quality of the setup. What's the technical chart pattern look like? How is the industry doing? What's the story behind the stock? What should be propelling it higher? If you look at, if we look back at GLD here, oh, where did it go? One second. So I put on a big position in the stock, but one, my portfolio is doing well this year overall. Two, technically this is a great looking VCP pattern, right? See that? And then three, the fundamentals are lined up for this thing. The lowering dollar and interest rates should help gold. There's a lot of FOMO and fear and FUD in the market, which should help gold. The government's talking about using gold to fight the deficit, et cetera, et cetera. So that's why I put on a big position on this one. And for me, this was a 25% position. Now, I just told you a 10% position is kind of the average, which it is. But yeah, I have all those things lined up in my favor. And then I have a 5% stop on it. But if it starts to roll over, I definitely will be kicking it out. Less than 5%. So yeah, that was kind of long-winded. 100K portfolio, 10% position, 5% stop, and then make your positions heavier or lighter first based upon these three things: your performance, market behavior, quality of the setup. Let's keep rolling. Okay, Gunnar was interested in that same question. I hope I answered that. I guess one other thing, I almost knocked my glasses off there, is just your ability in general. If you are, if this is your first year of trading, trade really small and just focus on the percentages. Or if you're having a real cold streak or something. Conversely, once you've got decades of experience in your back pocket, then you can get heavier a lot faster when you see, quote, good action. Let's see. Gunnar's asking, he says, which broker are enabling scaling in and out in a discrete manner? Gunnar's, I believe he's German. This is not his first language. Let's consider you buy 3 times a position at different price levels. If consolidation takes place, I would like to close the latest add-on first to reduce risk and let the 2 others continue to run. Yeah, makes sense. My broker doesn't allow for that, but always starts to sell the lowest position and price first. Hence, I'm ending up with a higher risk, and additionally, the positions with lower entries are out. Ugh. Yeah, when I do an add-on, I like the add-ons to be kicked out first for the very reason you explained. And then also, if I'm able, hopefully I'm able to hold those lower cost basis entries for a year, and then I get a better tax situation when I do sell. So I would not be surprised if you can choose which shares to sell. If you buy at 3 different price levels, like you said, or 3 different lots, when you go to sell, this is E-Trade, what I use. When you go to sell, you will see on here, it'll say select lots. So I have it set so the default is first in, first out, but a lot of times I'll change that and I'll pick the lots that I want to choose. So just explore the sell feature in your brokerage a little more and see if you have something similar, select lots. If you don't, I would contact your brokerage customer service, either phone if they're fast to answer, and E-Trade has gotten terrible answering phone calls, but don't get me started on that, or via, message their support area, because I bet there's a way that you can do it. Okay, good question. So two different ways. One, and this is probably the most important way, is just to do, what can we call it? Deep thinking. Think about the conditions in the world right now. What are the trends? What industries are changing rapidly? What's going on in the geopolitical situation? What's going on with interest rates? And then what is poised to benefit from that? Right now we see, maybe a year or two ago, when the Ukraine-Russian war broke out, we started learning about drone warfare. That was the time to go long in a bunch of these drone stocks, right? But what you do, so let me interrupt myself. So you make an educated guess as to what industries should be warming up. And then, you don't just blindly buy a stock in that industry, but look and see if the chart is lining up with your expectations. So right now we are just beginning the rate cut cycle, which should benefit car dealerships, home builders, any companies that loan money, banks, etc. So we do some deep thinking like that, and then we start looking at those stocks. So in theory, SoFi should start doing better. It's going to be easier for them to make loans because loan prices, interest rates are coming down. So we can look at the chart and see if the chart verifies our expectations, and then we can dig deeper and look at the whole industry. There's the industry chart. That looks pretty decent as well. So one way is just by deep thinking, and then the other way is by using tools. So I pay to subscribe to Market Surge and StockCharts.com. Market Surge has this great feature down here in the lower panel called 197 industry groups, and you may subscribe to a software that also does this, and you might be able to find this information for free via Yahoo Finance or something. I don't know. Do some detective work. But if you open up this industry group panel, this gives you all of the industry groups ranked from number 1 to 197. Number 1 right now is alternative energy. 197 is insurance brokers. Not only what rank it is now, but also where it was last week, 3 months ago, and 6 months ago. So I like to stay in at least the top quartile, which is the top 25 industries or so, which is right here. Then I look for industries that are really moving. Like electrical power equipment is ranked, it's only ranked 22, but it was ranked 109 6 months ago. So I will dig into this industry, see what I can find. And then the second thing I'll do without any, I'll try to be bias free, and I'll run a particular screen. Like I like the Minervini, here's the Minervini 5-month screen. And let's just take a look at this real quick, and let's see what jumps out at us. These are stocks that are all in solid uptrends. So let's just see, and let's do the 1 month instead of the 5 month. That'll give us a little bit more of newcomers, so to speak. So let's go again. Let's click on this 1 month, and let's just see what stocks are in here. Let's organize it alphabetically. So we got some utilities, we've got some telecom. So looking through this, all of a sudden, look at this, some oil and gas refining are popping up. So here's a handful of, here's 15 or so oil and gas stocks. I haven't been paying any attention to those for quite some time. So this tells me that it seems possible that industry is heating up. So now I can cycle through these, and look at Delek US Holdings. What a powerful little cup with no handle breakout there, right? Now here we go. We can jump right in. This is a cyclical, got to be careful, but maybe it's going to make a handle and break out. So I use market search like that. And then I also use the market carpet feature on stockcharts.com, and you can find these on various softwares. Just get a visual indication. Technology was lousy today. Financials were lousy. Discretionary lousy. Healthcare, a lot of green. And the core staples, consumer staples, sorry, a lot of green. So if you check this every day, you know, it takes 1 minute, 2 minutes, and you can kind of get a feel for, okay, which industries are coming up green day after day, which industries are coming up red. And then it also gives you this sector summary. Today, energy outperformed, and real estate was actually the worst performer. Technology was until the end of the day. So I take a look at those. Hope that helps. Here's another one from Hakan. One more question. I use often Minervini's 5-month template and market search for trade ideas going long, but how is it in a bear market? So the short answer is the results are very short, right? Where you might have 500 stocks on it in a strong market, there might only be 25 stocks on it in the heart of a bear market. And so the length of that screen results tells you something right there. Does a template exist for ideas going short? Yeah, absolutely. What is your approach, Joe? Maybe you explained in your former videos. Yeah, okay, so hold on. Okay, so 3 things. Number 1, I virtually never short during a bull market or even during a choppy market. You're just swimming against the tide, and even perfect looking short setups, you know, a head and shoulders top breaking or a double top rolling over, etc., etc. Oftentimes those will just be bull traps and resolve to the upside. Regarding an actual screen, there is one called Evel Knievel short sale. This is stocks trading at 5 times the book value or more and losing money. I have it favorited. I can't actually remember how you find it, and I don't want to spend I don't want to dig for it right now, but just look for it. I'm sure you can find it. Evel Knievel short sale. It's one of the pre-made screens, market search. And then the other thing you can do again is to use that industry group system, and this time we're going to look in the bottom quartile. Industries ranked 150 to 197. So let's change the sorting, and then we're going to, as we're going through them, let's just look. Looks like insurance brokers are really falling from grace. And then we want to look for the opposite of what O'Neill looks for on the long side. So here's the stocks in the industry group. We could put them in reverse order of relative strength. Now, we don't want to buy something that is way oversold, right? But if we just start tabbing through here, we want to find, let's see. Let me find you a good example. Okay, not a great example, but we want to find a stock that's in a downtrend, right? Which this one is. We want to find a stock with decelerating earnings, 22, 37, 11, 7, yeah. And decelerating sales, 13 to 12 to 7. Much better if the company's losing money. This company's actually making quite a bit of money. And then you just short it via technicals. In fact, this looks like it could have been a short today with a stop right there. There are probably other short screens on Market Surge. You could probably make one. Honestly, the majority of my shorts are stocks that I had been watching and or was long in to the long side, and then the market rolls over. Suddenly they become a good short. For example, here's Roku in 2021. Was trading Roku. I was very familiar with it. Saw this double top develop, and when the market as a whole started to decline, we saw this double top confirmed to the downside, then that would be a good short. Okay, Karen wants an opinion on her trade with Dash. Bought June 2nd, sold half June 26th. Okay, still holding the rest. Let's take a look. Let me put that on my other screen. Let's pull up Dash here. DoorDash. Okay, so she bought it June 2nd. 1 second. June 16th. June 4th. Yeah, that's good. That's pretty good. Market had finished bottoming out and was trending up. A nice little breakout above this handle. So we kind of have a, let me switch to market search so I can draw on here. Yeah, this looks great. You got an inverted, you got a cup, right? You got a cup with handle. You also have inverted head and shoulders bottom, inverted head and shoulders within the bottom of the cup. You've got a nice tight handle. You've got the old fake out, shake out. You've got a fake out there. You got a shake out there. You nailed that buy point right there. And I would have probably added to it right there on June 23rd. So let's see. Bought on June 2nd, sold half on June 26th at 234 for 10% profit. June 26th. Yeah, so when it started to extend, you took a little off, which is something I do often and teach in my Patreon, and I think that's really good as well. As it is one of my personal sell rules to sell a piece at 10 to 12% profit. I think it's good to have that as a general rule, but you know, if a stock is not failing to thrive, I take profits earlier. Conversely, if a stock is explosive, I often will wait for 15 or 20% before I take a piece off. That's kind of a side note though. So 50% of the remaining shares before earnings on August 6th, which was right here. So you're protecting yourself before earnings, 22% profit, still holding the rest of the shares and thinking about adding to it at the next buy point within the next few days. So I think your trading thus far has been fantastic. This big pop here, you know, you already took some profit off already. If you had not taken any off, I certainly would have sold a piece into the big earnings move. This is kind of on the danger zone right now. It's hugging. We don't like when a stock walks the plank, so to speak. See how it's walking the plank on the 50-day? That is bearish, particularly if there's a lot of supply up here. And arguably there's not a lot of supply. There's a little supply above it. So we could almost call this a bullish pocket pivot. I like that it had a shakeout here. I like that it had a shakeout here. That being said, it is time for it to bounce. If it opens to the downside tomorrow and or undercuts this low, I would definitely be taking some off. Some more off. Or if it keeps trading tightly, the longer it moves tightly, the longer it hugs this 50-day, the more likely it is to break to the downside. Now your initial cost basis was June 2nd. Where did that go? Yeah, so you are at break even on those shares all the way down here. So you might sell one more piece if it behaves poorly. And then you might just try to defend your buy point with a trailer, because in theory that 200-day is going to catch it before your stop gets hit. Now, if we stop being so doom and gloomy, it's a good chance this pops to the upside, and that would look like a spot to add shares, something like that. Okay, we got to expedite this because we are at the half hour mark, and I try to make these a half an hour. Here's a few more questions. Hakan had a lot of questions this time, but that's totally fine. So how do you follow the money? I mean, sometimes we see rotation. You say it's just short term and the money will get back. How do you see such things? How do you know where the money goes? So I kind of showed that using market surge industry groups and stock charts, the market carpet, and so forth. And then part of it is just deep thinking and experience. When there's a bear market, the money virtually always rolls over into consumer staples and gold. Conversely, in a early stage bull market, the money almost rotates into tech. So that's part of it. And then I guess more deep thinking. Right now we are seeing NVIDIA sell off as the money rotates out of NVIDIA into, home builders and some biotechs and some retail, etc. But I don't think, I think that stock is still years away from reaching its final all-time high. So I guess a lot of that is just experience. Okay, the mutual funds list. How do you read the mutual funds list from IBD? I don't get it. I don't use the IBD mutual fund list at all. I know on Market Surge, if you open the right panel, there's the owners and funds here, and you can show fund ownership. I don't use this at all. I've never found it to be helpful. I think Peter Lynch, or one of those old school value guys, talked about figuring out which mutual funds, which stocks the best performing mutual funds are holding and increasing, yada yada yada. That I don't, that's not one of my methods at all. The only thing I do with mutual funds ownership and institutional ownership is I look at the trend. I want to see an accelerating trend. Oklo, here we have it, from 65 to 256. And I also like to see a relatively small number of funds, because then there's plenty of price discovery that can happen. It's a undiscovered gem, so to speak. 256 funds in this one, as opposed to Apple, 7,500 funds. Apple is not a hidden gem, and the fund ownership is decreasing, not increasing. But these are lagging. I think these lag by a few weeks or months, so I don't put a lot of stock, pun intended, into it. Do you use seasonality? I mean, it's in the back of my mind, and right now, September is the worst performing month in the market. It's traditionally choppy and moves are sluggish, so I just take that into account when I'm position sizing. But I certainly am not if a stock looks great, I'm going to jump on it regardless of what season we're in, and I'm going to sell if this chart is saying sell, even if we're in the hottest month of the year. Then he said, when I look at Oklo, I'm surprised how much this stock skyrocketed because there are no revenues and no earnings. But one time you mentioned that sometimes the trade makes sense. So stocks are trading mostly not on past history, but for future expectations. So if a stock is doing well in the past, it's likely to do well in the future. But most important of all is that future guidance and story. And Oklo is a nuclear power plant stock, and the U.S. government, led by one Donald J. Trump, has very publicly announced his moral and financial support for nuclear stocks. So these nuclear stocks have been trending well all year, despite having virtually no earnings or sales. Some of them aren't even going to make any money for a couple years, and yet the stock has gone from, look at this, 10 to 80. So yeah, some of the most powerful moves of all time are from stocks with virtually no earnings, no current earnings or sales. So if a stock has strong, the prior quarters have really strong fundamentals, that's fantastic. But we're most interested in future guidance and story. Here's Talon Energy. This year, the numbers have been pretty lackluster, but look at the guidance. See these big numbers for next year. That's what the stock is moving on. Then lastly, Hakan asks how you prepare for triple witching on September 19th. So let me just give you a blanket statement. There are a lot of unknown days when suddenly the market is very volatile, but there are also known volatile days when the Fed has a scheduled rate cut speech, for example, the end of each quarter, and then like a triple witching event like on this 19th of September. So I don't do anything dramatically different other than knowing that the day is going to be volatile. I'm probably not going to put on any positions at the beginning of the day and withhold any sales till the end of the day to see how the volatility shakes out. And then, I probably won't put on, like if the Fed is going to do a rate cut announcement September 17th, September 16th, I'm probably not going to go heavy into a bunch of positions. Same goes with triple witching. All right, guys, that is all the questions. I really hope that was helpful for you. I apologize if I was not completely articulate. It's really hard to answer these questions off the cuff, so to speak. If you're not a member of our Patreon, I show my portfolio and focus list each weekend. I do check-in blog posts and training videos during the week. We would love to have you join us. 7-day free trial. There is a link in the description, the comment section. And also, if you get a chance, in the description, my partner Seeking Alpha Premium there's a link for that too. That's my go-to place for fundamental research. I'll see you guys in the next video.